The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the wonderful Wednesday, the May 1st edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I want you to know I'm absolutely grateful for your presence here. But even more important than that, and that's this, during this next 53 minutes, I'm here to serve you. So feel free to pick up that phone. I'd love to hear from you at 877-927-6648. Now, if you've got a question but you can't call in, we've got your back. You can send me an email. Send that off to Steve at TFNN.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got a slightly mixed bag out there. The mix is coming from the Dow, which is trading up 102. Otherwise, the other U.S. indices are trading to the downside. S&P's off 10, NASDAQ 186. Russell is just barely negative, 133 points to downside for the semis. Trend is up 41. Gold's up $13, and silver's up 8 cents. Lights Recruit is off $2.25. Trade out at 79.70. Looks like it's forming an A to B equals CD to the downside. You've got natural gas off 7 cents, and the 30-year Treasury up 13 ticks. Trade out at 114.07. Now, our leader in the clubhouse to the upside is Powell Industries, a $31 move, 21%. Followed by Transmedics Group, a 23%, a $23 move, 25%. United Therapeutics up 18 bucks, 7.6%. Garmin up $17, nearly 12%. And Root is up 21%. That's a $15 move. Our shakers to the downside, 157 points or 18% for Super Microcomputer. MicroStrategy off 49 bucks. That's about a 5% move. Nvidia off 32, 3.7%. Broadcom down 25, nearly 2%. And CDW Corp down 22 bucks. That is a 9% move to the downside. We've got movers and we've got shakers. Of course, we've got Powell coming out at 2 o'clock with the Fed decision, with the Fed statement, and then we at 2:30 we get to hear Chairman Powell speak. So we should have some fireworks. I wouldn't expect these markets to get too far away from where we're at. Maybe we even get tighter. We get back closer to the break-even level, the flat line, so to speak. But the real question is, are there any tells in the marketplace that you and I can rely upon to get a feel for where price is going to head to? So that's really kind of what we want to do today, this morning, at least in the very early stage of this morning. And to do that, what do we want to do? Well, first, let's just take a look at where we're at daily and weekly with regard to the equity future contracts, because that's what we're really going to focus on this morning, or at least in this first segment. So now let's just take a look at where we're at with the daily and the weekly time frame. On the daily ES, you have a buy the D point pattern that was formed by that bull sash candle back here about a week plus. Now, right now, all we're doing is trading with inside its profile level. Prices below that red oscillator and change line. You can easily get down and test support at 50.22. And, of course, you've got support down below that. That would be the low of that bar from April 19th. That's at the 5,003.75 level. Inside the, and on a daily, a weekly time frame, you could potentially close below the bottom of his profile this week. It's too early to know whether we will or we won't. If things are really bad, bad. Where support is at 47.54. That's its breakout level. In the NQ for the weekly time frame, you've got a Rhodes Momentum Indicator top. You got that in the daily time frame, and we'll go take a look at a monthly chart here in a little bit, and we're going to see we also have that same pattern on a monthly basis. That's not good. Bear markets happen or can happen when all three of those time frames have Rhodes Momentum tops in them. And historically, I've gone back and studied it. So now we don't have that same pattern necessarily inside the ES Mini or the NASDAQ 100, so we'd have to go take a look at its charts as well. Wouldn't just rely upon the equity future contracts, but it is something that we definitely want to do. If we take a look at and as far as where its levels of support are, 14,752 and 16,545. Resistance, 18,089 and 18,619. On the Dow equity future contract, it would negate its TD9 count bottom today if we were to close below 37,911. It has support at 37,651. That's the bottom of its daily profile. It also has that at 37,676. That is its TD9 count breakout level for its weekly time frame. The Russell 2000 also has tested and rejected its breakout level on its weekly time frame in 1948. It has a TD9 count bottom pattern with price simply consolidating with inside its profile. So that's where we're at there. Now I'm going to switch panels on the screen simply because we can take a look at volume a little bit easier on my black background screens. So we're going to go do that. I want to show you something that was kind of interesting out here. I was taking a look, just preparing for the show, just trying to also always understand the markets. What are they communicating to us? And the interesting thing here was the Qs are the one, kind of a weak indice out here at the moment. They're the ones that have been pushing to the downside. And so I always like to understand what's going on inside the QQEW, the equal weighted ETF. Typically, its messages are stronger than taking a look at the QQQ ETF out here. But here's the point that I wanted to make. I see that didn't stick real well. Oh, well, if we take a look at its swing point, which it has not been tagged yet, the swing point I'm referring to, QQEW, is from the day of April 19th. Now, when that made a low, it made a low with 94,000 shares. It's not a real liquid trading vehicle. We don't really use it for that. What we use it for is for information. Now, the top of that swing point is 116.18. So remember, the low, that swing point on April 19th, did volume of 95,000 shares. What did we do yesterday on the pullback? 34,000 shares, 1/3 of the volume on a fairly big, wide-ranging bar to the downside. That makes Stevie say, something to think about. Now, today, volume-wise, where are we at? We're at 16,000 shares. We're nearly 2 hours of trading in here. If we just simply say it's 20 times 3 is 60,000 shares out there, well, that's still going to be way lighter volume than the 94,000. So what you'd want to watch for today in the QQEW, does it get down and tag, chop below 116.18, close back above it, and do it on lighter volume out there? If it does, then the equal weighted ETF is telling us that it wants to move higher. But because this is the equal weight, what this is also telling us, if we take a look at the QQQ series ETF out here, and we know the Qs make bottoms with volume, which in essence it did out here on April 19th, and the volume down there was at, set to see my data box. The volume on that trading session was 75 million shares. Now, yesterday when we pulled back, it was 43 million shares out there. Lighter volume in the Qs on its pullback, lighter volume in the QQEW. And now what we've got is we do have price trading inside its swing point. This is the Qs that we're looking at. If today price closed about 422.75, we very likely have a test and rejection of a swing point. And that would say we had higher. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So you might be asking your question, why did we do all that? Well, we did all that to take us to this next step here. We were evaluating the ETF, so I wanted to understand volume. I wanted to be able to do something that you can do on your screens out there. Not everybody has access or accesses the equity future contracts, which is what we're looking at next. And then we're going to go from here, because what we established was, look, when we took a look at the equal-weighted ETF, the volume was pitiful on its move down. The same thing with the Qs out there. But what we do know, it's really those heavily the top 10, top 8 instruments, the heavily weighted instruments inside the Qs that we want to now go take a look at. And we'll do that after this. So we look at the bottom row of our screen out here. The bottom row are the short-term time frames. Now, when I say short-term, the bottom right is 5-hour. Next to that is 4-hour, then the 120, and then on a 60-minute time frame. So on a 5-hour time frame, what we've got right now is you've got a potential TD9 count bottom pattern that could form by day's end out here. It is in bar 8 right now. It's got support at 17,308. So I don't know whether it will or whether it won't form that pattern. In the case of the 4-hour time frame chart, the current candle closes at 2 p.m., just as Powell's coming on. As long as at 2 p.m., price is able to close below 17,511, even Steven. As long as the NQ at 2 p.m. is below 17,511, then you're going to have a TD9 count bottom on the 4-hour time frame chart. We need to see a little bit a further push lower on the 2-hour time frame chart. That means we need to spike the low. That could easily happen. Now, this bar right now is bar number 9, and that ends at noon. But at 2 p.m. is when that pattern could complete out there. And right now, this bar number 9 just needs to close below bar number 5. That closes at 17,467. So it seems like a likely outcome out there. And then you'd have at least the bar number 9, but you still will have the low at bar number 7. So you still have to see a spike below that level out there by 2 p.m. On the 60-minute time frame chart, you've got a Rhodes momentum indicator signal that is present. The same thing on the 30-minute time frame. Those patterns would get negated with closes below the low of the day. The low of the day so far is at 17,412, so you'd watch that. Now we start taking a look at the larger term time frames. This is what I mentioned earlier as we were taking a look at the NQ on its daily and its weekly time frame. I had mentioned on the monthly time frame, what was generated was a Rhodes momentum indicator pattern yesterday. That completed that with that bearish engulfing candle. Now, if we're going to get moving to the downside, you need to see the NQ close below this 17,167 level out there. I had to use a continuous contract in order to get enough data to be able to identify what patterns are present at the moment. So we'd be watching that 17,167 level. If you take a look at the weekly time frame chart, it already has a Rhodes momentum indicator top, and it's trading below profile support, and that suggests a move back to the 16,545 level. But as I had mentioned, if you really go back and study, or I've done this, gone back and studied all the way back into the 1800s, where I've got the data. If you take a look at when we get real bear markets, really bear markets out there, and again, I'm going to have to go to the cash indices and do that, which I will, you will see Rhodes momentum indicator tops, typically for all three. At least two of the three will be out there. Maybe you see a sell, the D point, or a TD9 count for one of the others. But typically, when all three are flashing that same indicator, it just simply says be careful. So here's the word of caution right now until I do that study, which I'm not going to do during the show out here, but I'll do that. Maybe we'll take a look at it tomorrow out there and see what the cash indices are signaling to you and I. So at this stage here, how do we evaluate this? Well, on a short-term time frame, what we have are bottom patterns that are attempting to form. So we at least know that bulls are trying to do that. We've got that volume metric to take a look at, or we did take a look at inside the QQEW as well as the Qs. So the last piece of information that we can do is what's going on the weighted on the instruments, the top 8 instruments that make up the NDX 100. So for that, we're going to switch screens. You're looking at the next 8, not the first 8. So if you give me a moment, we should be able to get there. I think it's right here. And in the upper left-hand side, you've got Microsoft. Now, in the case of Microsoft, as we open up this chart, what we're going to see is this has now confirmed an A to B equals CD pattern to the downside. It did that. It certainly completed that yesterday. The volume in yesterday's candle, 28 million shares. It was passing 20 million shares. So you now have a confirmed A to B equals CD to the downside. Its initial price projection in about the 378 level. The only thing that would get in the way of that pattern would be price closing back above the bottom of its profile out there and doing that today. And then you could almost say, well, it was a one-hit wonder to the downside. That level at day's end that you need to see it close above is 398.86. So on a daily time frame, Microsoft says it wants lower price. How about Apple? Apple's just the opposite. It's saying it wants higher price out there. It has a Rhodes momentum indicator, a bottom signal. Now, we don't have the bullish reversal candle. We just have price trading with inside its profile out there. So it does have support at that 168.24 level. But at this stage, it's looking to Stevie like it may want to, in fact, head higher. It's not giving us a clear signal that it wants to head lower. NVIDIA has a buy the D point pattern. It confirmed that pattern back here in the trading session of both April 23rd and April 26th when price had gapped up. Right now, we just have a consolidation with inside its profile. That's between 816 and change out there all the way up to 891. If we take a look at Amazon, Amazon has a TD9 count bottom out here with price consolidating with inside its profile. So it's got a bottom. If we take a look at Meta today, if it generates a bullish reversal candle, and yesterday was a doji style candle, very small body candle, be very easy to generate a bullish engulfing candle today. If it does, you have a buy the D point pattern. What we also have is a new profile. We spoke about this yesterday. That new profile has support at 424, resistance up at the 452.70 level. In the case of Abgo, trading below its oscillator and change line right now, that may be signaling to you and I wants to get back to support at 1214.80. Really, all that I see when we open up this chart is just a sideways consolidation pattern. So not much more to report there, but nothing that's suggesting that this wants to go bust out the lows. If we take a look at Google out here, Google is in a confirmed A to B equals CD pattern to the upside. Its initial price target on this A to B equals CD move would get us up into the 180 3-ish level out there. So we've got a confirmed A to B equals CD pattern to the upside in Google, with price right now pulling back and testing its key level of support. That was at daily, oscillator, and change line out there. I guess what I'm saying here, we take a look at Tesla. We have a clear bottom there. That's a Rhodes momentum indicator bottom pattern that is present. Price is above profile, and it's oscillator and change line. So the point that I really wanted to make here, as we've gone through and taken a look, I don't know what these 8 instruments total inside the NDX 100, 40%, 45%, maybe even above 50. I'd have to go back and take a look at it, and you'd have to add Google twice out there for its 2 levels of shares out here. But we're not seeing something that is, for me, is not definitive that these top 8 instruments want to move to the downside. In fact, if anything, we've got some that are telling us they want to move to the upside. Is that some kind of tell out there? Let's not stop there. Let's go from here. Let me close out this screen and go over to that other screen out there, the other white background screen. And let's just simply pull up the ES mini charts while we've got a minute to go here. So if you give me a moment, we'll get to that set of charts out here. Where is it? Daily, week? No, it's not. Right here. So here, okay, perfect. We got the ES Mini. So in the case of the ES Mini, price is trading into its swing point. It's with lighter volume. And if it closes today back about 50, 58, it will have tested and rejected a swing point on lighter volume and suggest it wants to move higher. TD9 count pattern is likely going to form out here on a 5-hour time frame. This bar is going to complete at 2 p.m. today. You've already got a TD9 count bottom on the 4-hour time frame chart. Rhodes meant to indicate the bottom on the 2-hour chart. Same on the 60. Same on the 30. Same on the 15. Same on the 10-minute chart. Well, look, folks, if we take out this morning's low, the low out here in the ES Mini is down at 50.3775. We're headed lower. But what is the market telling us right now? You tell me. Well, great.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Tigers, the inaugural session of Live Trading Fridays with Larry Pesavento was a massive success. Trades were communicated, questions were answered, and money was made. Every second and fourth Friday of the month, from 9 a.m. to noon Eastern Time, Larry wants you to join him as he places live trades and takes your questions. That's right, with this monthly subscription, you receive access to 2 live trading events. We are gearing up for the next session Friday, April 26, so there's still time to sign up. For this month only, use code LarryLive at checkout in order to secure $50 off your monthly subscription price for as long as you subscribe to the service. We'll see you next Friday, April 26, Tigers. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Let's get to some requests that have come in. The first one is from Dan inside the Tiger's Den. This is for Wave Life Sciences. WVE is the ticker symbol. So it looks like WVE is going to generate a profile change in trend signal. It'll do that today, Dan, on its daily time frame, as long as price closes above 509 today and 509 tomorrow. I don't have I take that back. Is there an A to B equals CD pattern? There may be a buy the D point. Let me just take a quick peek at that. So go down to there. I'm just going to simply move this over to the high that takes place after that. Yeah, it looks like we do have a buy the D point pattern out, but let's just confirm that. Oh, I was wrong. We do not. So we don't have one of Stevie's bottom patterns or signals out there, but we do have one that is possibly in play out here, and that is that you're going to get a profile change in trend. So again, it closed above 509, suggests we had higher. We are trading right now above 517. That's the top of its weekly profile. But there is resistance there, Dan, and that's at 543. Now that number's going to go up by a few pennies, but if you do see, it doesn't have to be this Friday, but if you do see a close above that weekly oscillator and change line out there, that's going to confirm that we should head to higher ground as well. Now, the key area that this is dealing with comes from the monthly time frame chart, and that is its TD9 count breakdown level at 664. Yes, we had one close above it on a monthly time frame. I'll grab my cursor out here. Let's go find out what month that was. That was back here on the trading month of December of 2022, and then it was a false breakout. And we can see just a few months ago, back in March of 2024, price tested and rejected that level. So if you're asking Stevie, where is your key resistance spot, it's going to be at 664. And if you can start getting closes above that level, then you're off to the races. But daily looks good. Weekly says I've got a battle at around 543, and then you've got that 664 level to contend with. So Dan, I hope that helped you with your with that instrument, and then I provided you with some information that you weren't aware of out there. Let's go take a look at our next request coming in from Duncan Steve inside the Tiger's Den, and that wants Duncan would like to take a look at Amazon. So Amazon was out with earnings last night. We took a look at that, I believe, even towards the end of the show yesterday, trying to identify what it may or may not do. All that we had was that clear bottom picture, that TD9 count pattern, but we also had price that was dealing with its profile. It's still dealing with that today. So you've got resistance is at 181.07, and support is down at 174.97. That's the daily time frame. Weekly chart's got a Rhodes momentum indicator top with price consolidating with inside its profile. And on a monthly time frame, you just have price getting back to prior highs out there, but no topping pattern or signal along the way. So Amazon, you've got to close. It's got to close above 181.07, due for two consecutive sessions, really 183 and change. Let's call it 184. If Amazon can close, Duncan, above 184, then you're off to 188.69 out there. That's what I see when I take a look at the AMZN charts out there. McGuppy would like to take a look at AMD. So let's pull up those charts out there. We take a look at AMD. It needs a bullish reversal candle that has triggered a Rhodes momentum indicator signal today. So if you're looking to get into AMD, McGuppy, you want to wait for a bullish reversal candle. That would be the first thing you'd be wanting to wait for. After that, what you'd then be looking for is, can price take out its battles? Its battles, one is at 152.82, another is 159.58, another is at 161.62, and then the final battle would be up at 165.78. Just because it's triggered a Rhodes momentum indicator signal does not mean that that's the bottom that it's going to form. What you need to wait for there is that bullish reversal candle. Today's a gap to the downside, so you're not going to get that today. If we look at the weekly time frame chart, not that I have a topping pattern necessarily out there, but what we do know is we've got a profile change in trend. Price has been below the bottom of its bullish structured weekly profile for more than 2 consecutive weeks out there. That says that if if AMD does not find a bottom, it'll go seek out that 94.07 level. Now, at the same time, on a daily time frame, that Amazon has triggered a Rhodes momentum indicator signal. It says prices getting back to its daily breakout level at 140.15. So ideally, you'd see that bottom pattern form right as prices approaching that level, as it is right now, and then you'd at least get some type of rally or counter trend move out there. The weekly is one that says you've got to be careful, and I would say now on a monthly basis, we have opened up. We are now trading below that green oscillator and change line. As long as price remains below that, 149.87 on a monthly chart, price selling, I would say pressure would be to the downside. Now, the downside target, there's a new profile that is formed. See if we can figure out where the center is on this. So the new profile, support is at 106.54, the center is at 119, and the top is at 200. Okay, so there's the top. I don't see the center. It's got to be behind something. And so you've got a new profile. But again, the key level here, the bottom of that profile being the 106.54 level out there. So that's what I see when I take a look at AMD. McGuppy, I know you'd also like to take a look at the SMHs. So let's move over onto those charts and see what kind of signals they're providing us with. And we take a look at the SMHs. What do we know? We know there's an A to B equals CD to the downside. It's waiting for a bullish reversal candle to confirm that pattern. Price right now is below profile support at an oscillator and change line that just changed to red. What that tells us, McGuppy, is that price should go target it's a swing low out here, or at least trade into it. Looks like maybe it's doing that today. That swing low that we're looking at is April 19th. The volume there was 13.5 million shares. Yeah, it's hit it. All it had to do to hit it was 208 even Steven. We got down so far to a low. Right now we're trading at 207 and change. Volume is 3.5 million shares. 3.5 million shares, 2 hours of trading, 3.5, 7, 10.5, 11. And looks like we may pull into the SMHs with lighter volume. Won't know till day's end, McGuppy. But if you did do that, which it's doing right now, and price closed above 208 even Steven, you'd have a test and rejection of a swing point on lighter volume. And I'll pay Tom the dollar to say this: if you can't bust them to the downside, price will try to bust them to the upside. Now, bust them to the upside right now because price is trading below profile support. That's only going to be at 214.36. And if it can get through that, 219.67, 222, and then finally 225. Weekly chart has got a TD9 count pattern, but price finding support at the top of its profile. And on a monthly time frame, we've got a Rhodes momentum indicator top. That says the SMHs should pull back to 192.85. Just doesn't tell us when. But look, on a daily time frame, we're trading below support. As I've mentioned, a profile support out there. We are pulling back with lighter volume. I'd first watch today. Is today a test rejection of that swing point? If so, then we keep chopping around and we move to the upside. Just be careful about what the SMHs are saying right now at this moment in time for the monthly and the weekly time frame. So McGuppy, I hope that helped you out. Thank you for the twofer. Always much appreciated. And we're going to go take a look at Hi-Ho Silver. That's for pearls inside the Tiger's Den. Let's see if we can get through this before we go to the break. Not likely, but let's at least get the charts up on our screen out here. Thought I had them. Here we go. So now we come take a look at Hi-Ho Silver. By the way, silver yesterday, as it ended the month, it confirmed a sell the D point pattern out there. I'd have to put up the continuous contract out here. I can do that. SI without changing everything else up. So I should have done that anyway. So let me pull this open out there. And you can see the A to B equals CD pattern with that bearish shooting star. By the way, here is the A to B point. And that was the B to C point. So we'll come back and further take a look at silver for you, pearls. But the monthly chart just generated a sell the D point pattern. That suggests move to 25.28. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're taking a look at silver. This is for pearls inside the Tiger's Den. So we've confirmed it on a monthly time frame. We've got a sell the D point pattern as a result of last month's April's bearish shooting star candle. Price should pull back to find support at 25.28. We've got a TD9 count top on the weekly time frame. Price has found support, and that's at its oscillator and change line. Pearls, if you see a close below 26.46 on a weekly time frame, the next level of support would be 26.15. If you see it close below 26.15, then 22.41 becomes the price target. Of course, if price is able to take out its highs, the high we're taking a look at for the July contract is at 30.19. If price takes that level out, we'll negate its weekly TD9 count top and maybe negate its monthly sell the D point pattern. We've got a sell the D point pattern on the daily time frame for silver as well. Yesterday was a close below the bottom of its bullish structured profile. We're below that right now. We could get 2 consecutive days. That gives us a profile change in trend signal, and that suggests that silver wants to go target 24.76. So on the longer term time frame pearls, we've got 24.76, 22, well, we've got really 26.15, then 22.41, and 25.28. Those are your downside targets. And of course, if we take out the recent highs out there from 4 weeks ago, then we're moving to the upside. When we take a look at the intraday charts out here, 30-minute Rhodes Momentum Indicator bottom. Same thing on the 60. TD9 count on the 120. Rhodes Momentum Indicator bottom trying to form on the 240. No signal on the 5-hour time frame chart. So much like the ES, the NQ that we took a look at, if we're looking for any kind of hints as to what the market might want to do, the short-term traders are positioning themselves for some type of bounce or rally out there. And that's what I see when I take a look at silver pearls. I hope that provided you with the information. In fact, more information than what you were looking for out there. And let's stay in this metals area, because Hector and Patty have a question about Newmont mining. And there are a number of A to B equals CD patterns to the upside there, so we can take a look at those. But what I'll want to do first out here is tell you about the dangers inside of Newmont mining, if there are any. So first of all, let's take a look at the daily time frame chart. Let's figure out, did it form any kind of a top out there? Well, what we can see, and this is courtesy of Basil Chapman, it is called wave number 7. That is letter G. It is a very small portion of the Chapman wave. wave, and this might not even be it the way that Basil teaches it, but when we do get to that 7th inning stretch, that is letter number G out there, oftentimes that can be a top or a bottom. Turns out in this case, it was a top out there. Now, what price is doing on its daily time frame, Hector and Patty, it's pulled back. It closed just below the oscillator and change line yesterday. It's testing it right now, and there's a new profile. So you've got support. It's down at 39.52 and resistance up at 43.91 out there. A to B equals CD. There's a bunch of them we can draw in here. The larger one, what we'd be looking at, I'll just simply move this from the smaller one now. I was going to try to do that. I'm going to try again to see if I get that CPA stuff working for me. There's your A to B point. And by the way, the B point out here on this A to B equals CD on a daily basis, volume of 24 million, and it was passed with 36 million. So yes, you've got gigantic A to B equals CD patterns to the upside. However, that means that we would have to ignore all of the other patterns and signals out there. And Hector and Patty, you and I, we are not about to do that out there. So yeah, there's the A to B equals CD. And so longer term, I think what this tells you and I is gold wants to trade higher. In fact, I know that's the case. We made a new all-time high in gold in terms of yen yesterday. And yen and gold does not top out first in yen, okay? And then eventually, the dollar is the one that will be the one that the dollar, the gold and silver, gold priced in U.S. dollars will be the one that will give us that signal out here. But you do have an A to B equals CD that takes us to the upside. But right now, the question is, does support hold on any pullback, or can price take out that wave number 7 pattern? If it does, then the A to B equals CD that you're looking at will get underway. Well, how about the weekly time frame? Did the weekly time frame confirm an A to B equals CD pattern? Well, last week, its volume was 89 million shares, and the B point that it was passing at 79. So yes, we've got that same A to B equals CD. However, if price this week closes above 39.65, you will have a confirmed TD9 count top for the weekly. So we got a monthly wave 7 top. The weekly could generate a TD9 count top, and that would suggest a pullback to 36.56 out there. This pattern can form the following week, not this week. It will complete next week. So it could be still bar number 10. And that could be a high that would identify that pattern. And then finally, we get back to the monthly time frame. And on the monthly time frame, what we see out here is we see resistance. We see a sell zone that was tested last month, and it held. And that sell zone is between about where we're trading right now. It's a few pennies higher. It's up at the 41.26 level. So between 41.26 and 43.18, that is your sell zone. So as price was hitting the sell zone on a monthly time frame, looked like we're getting a TD9 count top on the weekly, and we had that wave number 7 top on the monthly. So until those highs get taken out, Hector and Patty, these A to B equals CD patterns are nothing more than interesting, but we don't have signals that they're going to go ahead and, I mean, yeah, we got the confirmation, but we also have to step back and take a look at what's going on right here, right now. And right now we know that we need to see close above that 43.18 level. So I hope that answered your question about the A to B equals CD patterns. Absolutely. We have confirmed patterns to the upside. But maybe that is really telling us about down the road, not this week, not tomorrow out there. So I hope that helps you out. Dan suggested that we take a look at AGEN. Says there's a number of folks inside the Tiger's Den that are holding on or trading this instrument. So if we take a look at AGEN, traded right now at 12.82 out there. Boy, this thing had one gigantic gap to the upside. We'll talk about wide-ranging bars. I mean, really, look at it on a monthly basis. Dan, what did these folks cure out here? Went from a buck to 11, 12. Right now we're trading at 12.82. So what is this doing as we speak right now? It's getting back to its previous high. So what this did a couple of days ago was it tested and rejected. Let me just open this up and just make sure. Yeah. So the swing point high on this appears to be the day of March 8th, 2024. 5.8 million shares traded that day. This was tested 2 days ago with 2.8 million shares. So now you had a test and rejection of a swing point on lighter volume. That's the old, you can't bust them up, you try to bust them down. Well, where's support on this? Well, the question is, and I haven't really studied this often enough, we can see that price closed above its TD9 count breakdown resistance level at 1160. We can see that yesterday price pulled back and tested and rejected that level. Sometimes, I haven't done enough work on the TD9 count breakout and breakdown levels to know if, like other lines that we might draw in the sand out there, whether or not old resistance can become new support. So just something to consider out there, Dan and Dennis, who are trading AGEN. You'd like to see it hold this 1160 level. Revenue split. It doesn't show for the revenue split. That's odd because usually, let me just reload all historical data. I don't think it's going to change right now because it was a brand new chart. Oh, it did. Thank you. Now we got it. Okay. So let's just forget basically every gosh darn thing Stevie said about AGEN. And let's come back and now let's take a look at it and try to figure out exactly what it's doing. Thanks for that info, Dan. Steve Rhodes with TFNN. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. Now we got a much better set of charts here for AGEN that went through a reverse split. I almost did a reverse split this morning myself while working out, but thankfully I didn't. 1286, Dan, is a key number that you and the other dentists are going to want to be watching. Why? Because that is what we got last week was a confirmed weekly Rhodes Momentum Indicator bottom, new profile that also formed. And if you get it close above 1286 on Friday, you'll then have a profile change in trend. And that would suggest that we had higher. As you pointed out, last month was a TD9 count bottom pattern. As long long as price can get above this red oscillator and change line, that would suggest that we rally up to resistance. Now, the last time we had a TD9 count monthly bottom was back in June of 2022, and price ran right in resistance at the top of its profile. Don't see any reason why it won't do the same thing here, but now it's not the top of the profile we'd be looking at. It would be between the bottom at 30.14 and $32 even Steven out there. The daily chart looks just fine out there now that we've got all of the data. So I hope that helps you out. We had a request by No Spin to take a look at CVS. CVS just simply has dumped this morning. I mean, it has gapped to the downside. It has gotten all the way back to its monthly TD9 count breakout level. That's at 56.19. Price is also testing a swing point from back in April of 2019. There were 264 million shares on that monthly basis. We just started the month, so no idea to know. But what I can share with you is if price does get below this level, what I see here is I see a very large consolidation pattern in CVS. And if it busts through that consolidation to the downside, my goodness, this thing, so 110 to 50, it gets back towards zero out there. I don't think that's the likely outcome, but right now I wouldn't touch this. I don't see any kind of bottom signals or anything along those lines. Lastly, what we'll do is we'll take a look at BCRS. This is for Brent in Martinez, California. He's looking for a bottom. Wave number 7 bottom on the daily, a TD9 count bottom on the daily. You've got resistance up now at 464 and then 479. A TD9 count bottom will likely form on the weekly basis. That's as long as price on Friday closed below 460. And on the monthly time frame, we don't have any kind of bottom signal here. If price does head lower, support should be at about 371. So you got a daily bottom, potentially a weekly bottom forming out there. And both those should lead to a rally. Again, 464 and 479 being key battleground areas. Folks, please stay tuned for all the great programming. Obviously, there'll be some fireworks probably between 2 and 3 o'clock. I'll be back with you tomorrow on Terrific Thursday. Please have a wonderful Wednesday, and thanks so much for joining us. Take care.